What do you call a belt made of $100 bills? A waste of money. This is so stupid. Are you just starting with your trading journey and have no idea where to begin? Well, stay tuned. In this video, I will show you which financial instruments you can trade in the markets. Hello everyone, welcome back to my channel. My name is Dan, and in this video, I will be sharing with you what are the financial instruments that you can trade in the markets and which one should you choose in order to start your trading journey. Please pay close attention since this will be very serious and important topic. Alright, let's start. First instrument that I'll be covering are stocks. Stocks are the shares of the company which ownership is divided. A single stock means fractional ownership of the company proportional to the number of shares. For example, a company has 100 shares and you own 10 shares. That means that you are owning 10% of the company. In reality, those numbers are much bigger, but this is just an example. Stocks were created in 1600s in Amsterdam, the Netherlands, and the first traded company on the exchange was the Dutch East India Company. Nowadays we have tens of thousands of companies traded on different exchanges all around the world. If you have a limited amount of capital to start trading with, you'll be trading either cheaper stocks or fractional shares, and I'll be going over both of those. So what does that mean? That means that if you have $1,000 to start with, for example, and you want to buy a share of Tesla stock, you will be able to afford only around 1.5 share per current prices. On the other hand, you can choose to trade some less expensive stocks, like for example Pfizer, that cost around $50 a share. So for the same $1,000, you can get around 20 shares of Pfizer. Why is this important? Well, this is very important because that's how you calculate your risk when you're entering a trade, your possible gain or possible losses. If the Tesla stock goes to, let's say, $1,000 per share, now your investment is worth $1,500, which means that you just made $500 gain. Congrats! You're earning money just by watching this video, huh? Nice! But the same rule applies if Tesla stock goes, let's say, down to $300. That means that your investment of 1.5 share is now worth $450 and you're losing $550 on this trade, and that's the pain a lot of people feel in the market nowadays. So once we're done with calculating simple things like profit and loss and how to approach a trade, let's move on to the next instrument. The next instrument I'll be covering are index funds or indices. Index fund are a mutual fund or exchange traded fund which is designed to track the returns of a market index. The most famous indexes in the world are USA's S&P 500, Dow Jones Industrial, Nasdaq 100, Germany's DAX 40, Japan's Nikkei 225, UK's FTSE 100, etc. If you're still confused, let's dive in deeper and try to explain. Let's take S&P 500 for example. S&P 500 is an index fund that consists of 500 largest public companies traded on the US market. That means that their portfolio consists of 500 companies and is tracking a general performance of the US economy. DAX 40 consists of 40 largest companies traded on the German stock market. FTSE 100 consists of 100 largest public companies traded in the UK market, and so on and so on. You can do a simple Google search on all these index funds and check how many companies exactly is in each and every one of them and what do they track. So now when you have an idea what the index fund actually is, let's go over why you should trade one. Well, to start, they have the biggest amount of people trading them and the liquidity is huge. Also, they're moving based on the performance of all companies in the index, which means that let's say 5 companies within the index are having a really bad time. That means that most probably index will not plummet. But on the other hand, if you buy shares of a single stock and the company has financial struggles, it will go down and your investment will go down with it. So that means that it is safer to bet on a performance of an entire market or economy than to bet on a performance of a single stock. But the reality is a bit different. If the 5 companies that are performing poorly in the index are, for example, Tesla, Microsoft, Amazon, etc., then index will most probably go down as well because they are the biggest companies in the index by market capitalization. But don't worry, we will cover market cap later on in some of the next videos. Let's move on. The next instrument that I'll be covering are futures contracts. Futures, however, are definitely not a tool for beginners, and I do not recommend you trading them until you have some experience in the market. The only reason why I'm briefly mentioning them is because I personally prefer trading them the most. It is a complicated topic for beginners, however, I'll just give you a definition, which is it is a financial contract that obligates parties to buy or sell certain asset at a predetermined future date and price. I will put some links down in the description below so you can educate yourself in future if you want to. Okay, the last thing that I'll be covering are cryptocurrencies. If you live under a rock and you have no idea what cryptocurrencies are, it is a form of digital currency that uses cryptography to secure transactions. They do not have a regulating authority and use decentralized system to record transactions. Alright, enough of the formal talk. Again, I will put some links down in the description so you can educate yourself also on cryptocurrency. You can trade cryptocurrencies in the platforms that I recommended in the previous video, so make sure to check that out. Alright, if you like the video so far, please make sure to press like, subscribe, and turn on the notification bell so you get notified whenever a new video comes out. Cryptocurrencies were invented in 2008 by an unknown person or group of people using the name Satoshi Nakamoto. The currency began use in 2009 when its implementation was released as an open source software. The name of the cryptocurrency is familiar to all of us, and that of course is Bitcoin, the mother and father of all cryptocurrencies and something that changed many people's lives. Bitcoin even to this day remains the most popular cryptocurrency traded by even governments like El Salvador and is getting more and more known by the day. Even though created in 2008, cryptocurrency did not become mainstream until recent years. Today we have around 20,000 different crypto projects, and some of the famous names are Ethereum, XRP, Cardano, Chainlink, Dogecoin, Shiba Inu, etc. I would mention Terra Luna as well if I didn't lose money there, so no praise. Although the word decentralization should be a synonym for cryptocurrencies, the reality is very much different. Many famous crypto exchanges are actually centralized, like for example Binance, and that means they're controlled by the authorities. Cryptocurrencies and blockchain itself gave birth to many good projects such as NFTs that became very popular nowadays, but it also opened door for Wild Wild West number 2. Scammers lurk everywhere and are trying to use every single method in the book, existent and non-existent, to try and steal people's money. So if you decide to go into this world, please make sure to educate yourself properly on what cryptocurrencies are, what the blockchain is, how does it work, and how can you protect yourself from scammers. Alright, now when we covered some of the financial instruments, I will leave it up to you to do your own diligence and research and decide which one of them you would like to start trading with. Stay tuned for the next video where I'll be going over what is day trading, what are the methods that you can use, and some basic examples of trade. So sharpen your pens, get your notebooks ready, we are going in hard from the next one. Thanks for watching this video and see you in the next one. Peace!